All right, it says we're live. So welcome back to Stock Tricks with Nick. This is our 5th episode that we've done. If you're new here, this is a stock trading YouTube channel. I'd say a stock trading YouTube channel for now. In the future, we'll be getting into more personal finance stuff, but I'm a technical analysis trader for the most part. Don't usually focus on fundamentals, really just read the chart, let the chart tell me what's going on. We do this every week, 7 p.m. Central Time. I'm in Chicago, so figured 7 p.m. would be good for the East Coast and the West Coast. Once we're done streaming this, it automatically updates to YouTube, so this will always be there. And the point of these streams are just to walk you through the trades that I made during the week, point out the stocks that set up really constructively for high probability breakouts. Always going to show my losers, which I don't think you get on a lot of different YouTube channels. A lot of people always just show their winners, but I try to really focus on showing my losers because you probably get all the, oh, this is a perfect setup for a breakout, this is how stock trading is supposed to go. But when it doesn't go your way, how you react is really, really important to keeping you solvent and to keeping you on your goal to beat the market. So I always show my losers, but also will show the winning setups as well. And we had a lot of those this week, even though the market downtrend overall. A lot of big names were down, and we'll get to that. Let's see. Oh yeah, big news. So I will be working on a Trading 101 playlist of videos, probably going to be around like 5 to 7 minutes each video. And this is kind of for any trader who's just starting off, trying to learn the basics, so they can go through all of those videos, feel prepared to take on the market. And when they come back to the live streams on Friday, when I go over all the technical analysis, they'll already understand what I'm talking about. It'll apply to them and they can see all the setups that I'm pointing out. So a couple of the videos that I have already planned out will be just really basic stuff. Best brokerages to use, kind of the pros and cons of each. Stocks versus options, pros and cons for there. Basically, on the option side, it's going to be more basics because I'm not usually an options trader. I've traded options in the past, so I do understand the basics, but that's not my main focus. We'll be talking about stop losses, risk control, correct position sizing, best setups, but this is where you guys come in. If you have any type of video that you want me to make that will help you understand more like the basics, maybe intermediate part of trading, that is great. So comment those suggestions below because I'm taking note, trying to make, I guess I don't know how many videos, whatever, however many I can make to help the new traders come through. And something that I would have loved to see 5-6 years ago when I started, when I made all the rookie mistakes, because there's a lot of great information out there and I would have progressed much quicker as a trader if I sought that out instead of trying to make those same mistakes and learn from them as my own. It would just be a quicker learning process. So a Trading 101 class, basically a playlist that you'll be able to click through and see all the different videos of those basics. So again, comment any suggestions you have below. That'd be really helpful. All right, let's jump to the screen. All right. So quick agenda here. We'll go over the market as a whole, and as you can see, stocks only go in a couple different directions. We've been so spoiled since basically March that any stock that pulled back would just be well above its highs in the next week. So what does it mean for our trading styles that we need to adapt to still be profitable while the market's pulling back, and why you don't just buy, if you're a trader, not an investor, if you're a trader, why you don't just buy and hold forever. And after that, why saving money on maybe a losing trade or cutting a trade that's starting to go against you early is even better than making money on a winner, especially with consistent position sizes, but we'll get through that later. And then we get to the fun part where we go over some of the stocks that I traded this week, and we'll take a break with that. We'll start with stocks that you guys call out in the comment section. So I did get a couple from StockTwits, a couple from Twitter that I'll be working in there, but use the chat to type out any stocks that you want me to review as well. After that, we'll go through some of the trades that I made this week, and then some watch list items, and we'll just wrap it up with more comment section trades. So just making sure, can someone comment really quick to make sure that I'm seeing the right screen? Give that a second. All right, sweet. So, market news. Let's jump to the S&P 500. Hey, Brent. So, S&P 500, rough week, only down 1% overall. But you saw a lot of shakiness in the market, which is exactly what we talked about last week. And hopefully you guys were prepared for that if you were to watch the stream last week. So if we zoom in here, we see this was Friday. Monday, it came up. Monday came up to this 8-day exponential moving average, broke above that, but could not break over the 20-day simple moving average. That's this green line, 20-day simple moving average. Found resistance there, pulled back, closed under that 8-day. Next day, gapped down, found support at the 50-day simple moving average, moved up a little bit. And then today, it opened down a little bit, sold off during the day. And then we had that end of week rally that we saw last Friday as well. So that's the S&P 500. Something that I want you guys to look at, which really gave me the signal to keep my short positions on, was this mini rally that we got was on way lighter volume than the selling volume here. And that does typically happen in sell-offs. Sell-offs happen quick. They happen on a lot of volume as big institutions take their profits. They want to be the first one out the door because they have a lot of shares to liquidate. So they'll be selling as fast as they can. And that leaves a lot of retail traders who are new to the game, always think stocks go up, getting caught in these upper levels, and then getting head faked as it was mostly retail traders bringing this back up and then getting trapped in this little head fake higher. But if you have the 8-day, 20-day, 50-day, and 200-day moving averages on your screen, I've found that to be extremely helpful when plotting everything out. So definitely throw those on your screen. Outside of the S&P 500, this is the NASDAQ. I think this is the top 100. Similar story, and you can see my buy and sell flags. I've been shorting the NASDAQ to cover any new positions that I put on during the week, because during these shaky weeks, I'm not trying to hit home runs. I'm trying to hit singles and doubles, just small wins. Thankfully, this week, it was actually my most profitable week since really keeping track of all my trades diligently. And that came from a combination of shorting the NASDAQ on the weakness and putting up some really quality setups that broke out for me. So NASDAQ here, started shorting. Is this? Here we go. Friday. Started shorting Monday as I put on new positions. Came over the 8-day exponential moving average, but couldn't even break over the high of this day here. And we pulled back, closed under the 8-day, then gapped down, tested a little bit higher over the 50-day simple moving average. I did take some of my short position off there just in case. All right, that's the bottom. We can't hold these prices under the 50-day, but put those back on when it pulled back down and closed underneath the 50-day simple moving average. And then today, put more pressure on my short as I added some quality positions that worked out for me. So where are we now? It did get that end of day rally. So if we zoom out here, we're seeing levels that we would have hit in July here. So that's the market overall, but just because the market's down doesn't mean you can't make money even on the long side. Most of the money that I made this week was actually going long. I would say about a quarter of my profit was from the short on QQQ, but for the most part, it was just putting on quality setups and then hedging with QQQ as the market's in, I would say, a shaky downtrend. It's not all down, but when you're swing trading, this shaky market isn't usually where you make the majority of your money. It's where you're trying to just squeeze out good setups, really take note of what stocks are showing the best relative strength. So when the market's pulling back, which stocks which have already been leaders are holding their strength, not being pulled down as much or even green on these red days. Because when the market does start to come back, those are the stocks that usually lift off quicker. So always taking note of relative strength on weekdays. All right, let's see. Let's go back to the agenda really quick. So why saving money is better than making money. So I put together, oh yeah, really quick disclaimer. I always forget to do this. I'm not a professional financial advisor. Anything that I say is my own opinion, and you should do your own research. Trading stocks have a lot of risk, and if you do not have the correct risk controls on, you can lose a lot of money. So I share all the risk controls that I use, and hopefully they'll be good ideas that you can research and then apply with your own research. But just wanted to throw that up here. But back to the story. So I created this really quick loss to break even chart here. So what this shows is if you have a 5% loss, if your portfolio pulls down 5%, you need to now gain 5.3% just to break even. And you're like, okay, 5 to 5.3, that's not a big deal. But once you get to 20% down there, now you need a 25% gain. 30% down, a 43% gain, and then you could see all the way down to it. I mean, if you lose 50%, you need a 100% gain. And if you're a trader who has a 50% loss, it's probably much harder to get a 100% gain. So that's why it's so important to always use stop losses when you're trading so you can limit your downside risk. Stop losses and correct position sizing have saved me from completely destroying my portfolio many times. So those are two things that I'm always going to stress on this live stream. So if you've been here for the past 4 weeks, you already know the spiel. But for anyone who joins today, those are the two keys to really becoming a consistent trader. Because if you keep your losses small, one, you just get more at bats. And with anything, the more experience you have, the better you're going to be at it. So if this is your first year trading, that's awesome. The more people we have, like more understanding of the stock market and are less afraid to invest, I think the better, because investing isn't something that's really taught in schools, which is ridiculous in my opinion. So if you're new to trading, long spiel there. If you're new to trading, make sure you keep your losses small. Make sure you have position sizes that are reasonable. So for me, my entry position size will typically be around 8 to 10% of my portfolio in a trade. When the stock market's shaky like this, I bring it down to 5% because, again, I'm not trying to hit home runs right now. I'm trying to stay alive until the trend starts to go up, because you can make way more money on the uptrend than when the stock market's pulling down. So I'm trying to get by right now and get good setup, so when the market does turn around, we get that good solid trend, then I could start pressing. But you can see here, the math works against you when you lose. So any money you save by cutting your losses short is better than that money that you would have gained if the stock would have came back. I had a conversation with someone on Stock Twits this week that was like, yeah, wasn't the greatest week, but my use of stops completely saved my portfolio. And I'm like, that's more important than saying, hey, I nailed this kind of random trade that I found that worked. Because the use of stop losses tells me that you're serious about risk control, and that's going to keep you in the game a lot longer. So you need to reward yourself when you get stopped out of a trade just as much as you reward yourself when a trade works out for you. Because mentally, we're seeing that loss and we're just conditioned to be like, oh, a loss is bad. No, a loss is not bad. Small losses happen. They're like a missed shot in a basketball game. They happen all the time. What you don't want is a big loss. And you can always stop your losses from being big losses by combining position sizing, correct position sizing, and stop losses. Done with that for the day? Probably not, but very important to talk about. And then I did want to show this graph. This is something that I've been working on. So I started trading, not trading, I started tracking my trades very diligently in June. And that's when I started thinking about bringing this channel back. So here we have me versus market. And you can see while I was kind of adopting a new trading strategy, basically flat results for 2 months or so. But I was tracking my trades. I was writing them down in my trading journal, learning a lot. And you can see not heavy pullbacks ever. I think the biggest pullback was a couple weeks ago, lost 800, but the market pulled back even more than that. So as I was slowly building that knowledge, slowly building the strategy up, and keeping my position sizing and stops reasonable, I was able to get more and more at-bats and learn quicker. And then you see right here is actually where I finished Mark Minervini's book, Think and Trade Like a Champion. And you can see the difference that book made. So if you don't follow Mark on Twitter, I say this all the time, but a lot of the trades that I put on come from Twitter. So make sure you're following good traders. Yeah, so you can see you don't have to always beat the market on winning weeks to eventually beat the market. I was flat here for 2 months as the market was taking off. Here's the NASDAQ, here's S&P 500. And while that was frustrating, I knew that my time would come, and the last 5-6 weeks here now have passed the S&P 500, and we're right there up against the NASDAQ. So a testament to just getting as many at-bats as you can, learning as quickly as possible, and really what consistent trading and consistent strategy can do. All right, let's jump back to that. All right. So comment section. What do you got for stocks that you want to see? So I did get some on Stock Twits and Twitter, so we can start with those, but make sure you use the comment section to show some trades. So first we have EVRI. And this is what I love about Stock Twits and Twitter. Through this week, I got, hey Nick, can you check out this trade? And I took a lot of those trades and were able to make money off it. So I love when you guys send me stocks to look at. Tesla, yeah, I'll check that out as well. So EVRI. We saw a huge pullback here, and I don't know what this company is. I don't know what it does. This is just technical analysis here. So looking at the chart to get the full story here, had a huge drop around when quarantine happened. That was 91%, geez. And now we're coming off here. Let's see what the first peak here is, 447. All right, so this is creating a little bit of a cup and handle here, which is what you like to see. Let's see, segment, yeah. So I'm just gonna draw kind of the peak here. Oh. Keep that flat. All right, so here's the cup, here's the little handle, another little pullback wiggle. Got over its 200-day simple moving average. That's always a sign that I'm looking for. Ideally, you're gonna wait until the stock moves up enough where the 200-day simple moving average starts to tilt up. You can see it's in a downtrend right now. You get the most amount of traders when all of the lines, all the moving averages are in your favor. Because trading is just a game of probabilities. If anyone says this stock is going to go to X by X day, they're just guessing. And if they're saying that as a fact, then they're lying to you. What I do is I try and put as much probability on my side as possible. So with that being said, maybe not a trade that I'm going to take because this 200-day is still pulling back down, but you do have the bounce off the 8-day exponential moving average, this purple line here. Little pullback on lower volume. That's good. I would have liked to see a move with more volume today. Maybe we get that in after hours, but you do have two moving averages just below, actually three just below here now, if you do want to take this trade. So this kind of gives a good opportunity to use bracket stop losses, which is something that I like to do on most of my initial entries on trades. What bracket stop losses are is just splitting your position up either in half or thirds and then putting them below certain lines of support. So in this case, you might put half your position with a stop under the 8-day exponential moving average and under this guy's low. So low 8. So maybe put one at like 799. And then if the stock moves against you, the trade's moving against you, you're trying to scale out, keep those losers as small as possible as you can. So you're scaling out of that with an initial half stop there, and then maybe another half stop under the 20-day simple moving average. So if it completely works against you, you're out a little bit quicker than you should be. And then if it goes back up, you can always buy more. That's what, when people are like, never sell, never sell, that's a really frustrating thing to hear because you can always buy back. Why hold on to a stock in a downtrend losing that's going to need that much more just to get back to break even when you can sell and buy back if the trend starts working in your favor? So that's EVRI. Probably not something I'm going to trade, but it is a good cup and handle. Just not all of the moving averages are in an uptrend. A little bit picky, especially during these shaky market times. Let's do another one here. So another one I got was Wayfair, which was up big. Yeah, up big today. So zooming out here, Wayfair obviously has been crushing it, up at the peak around 1,500%. Yeah, 1,460%. You can see I traded this a couple times on the upside. Completely missed this big run. That was a miss I talked about on an earlier stream. And since then, we've kind of been pulling back here. But, oops. Now we have a little resistance growing here, a little bit of little support growing here. Big day on volume. You can see these two up days were both on increased buying volume over the red day. You can see it got over its 8-day exponential moving average, over its 50-day simple moving average. First test of the 20-day, and It broke through but couldn't hold that, pulled back a little bit, but that's going to be the test for Monday. Does this get over, and does this close over the 20-day simple moving average? This was a stock that I had shorted when it started pulling back because it showed the most relative weakness when the market started getting shaky, with a 14% drop right away. So did short, covered it when it broke over that 8-day exponential moving average. So got a little bit of a profit there. But yeah, really liking this setup here. Ideally, it pulls back on low volume where you can get those moving averages even closer to your entry price. But if you're 5% away, that's not the worst. That's around my limit of if a stock's already kind of breaking out from a base. If it's over 5% away from the base, you're starting to get a little bit risky there. Over 10%, I will always not take that trade. But that's Wayfair. Like it. We'll definitely watch it going into next week to see what kind of action we get on that. And let's jump to Tesla. So Tesla had it's battery day today. Is that right? Let's see, Tesla battery day, September 22nd. No, not yet. All right, so that's what all the traders have been talking about was the battery day. This week, when I was reviewing this on StockTwits, I called out this converging of the 8-day exponential moving average and the 20-day simple moving average as really important support line to watch, because if you zoom out, obviously Tesla's been a monster lately. I've traded it in and out, haven't caught the most of the moves, but you're not going to catch everything. Let's see here. Yeah, I had this pullback. So when the market was pulling back and Tesla was pulling back, then you're looking for areas of support, and you can see right at, let me do a horizontal line here. So right at this horizontal line, you get the high of this day, you get the closing price of 9.4, close-ish to the high of this day, and then the converging of the 8-day and 20-day moving averages. So that was going to be the battleground for traders, and it looks like Tesla's, the bulls win again on that one. A little bit light volume today, but had a higher high, had a higher low. If you're already in this, now we look back at this area of support. If it pulls back, how does this area hold? If it holds well, and if that pullback comes on low volume, then you're good to take off. I don't usually like to trade around big news items. I never hold a stock into earnings unless I have a 10% gain on that. Even then, I'll probably scale a little bit out because, again, I'm using technical analysis. I don't know the fundamentals of any of these companies. So I'm playing a game of probability. If there's something that's going to be 50-50, whether it goes up or whether it goes down, I will stay away from that. So I'm not looking at trading Tesla going into battery day, but I hear it's supposed to be huge. So something to keep an eye on. I will trade it afterwards, depending on how the stock plays up, if it does create a constructive base to break out of. All right, another one that I wanted to talk about was PENN National Gaming. So Barstool had some big news today, I think it was. Their app launched in Pennsylvania. But this was a stock that I really got a good entry on this that I wanted to talk about because it's basically an ideal breakout setup. So what I'm looking for in a breakout setup, I want a stock that is off their 52-week lows by over 100%, ideally. Oh, that's horizontal, sorry. I want a stock that's over 100% off their 52-week lows. That shows that there's a lot of interest in the stock. It's not a loser. I want a stock that's within 25% of its all-time highs, because that means it's not breaking out of an uptrend. It's not in a downtrend. It might be in a pullback, 25% off the highs, but not completely broken down. So Absolutely missed the clean breakout here on their just before their earnings. But again, that's tough because I don't like to play earnings. But after that, then I got laser focused. I'm like, okay, this is a stock that is up, I don't know, it was up 1,300% from their lows. And just because a stock is up a ton doesn't mean it won't go up even more. That's something that I really learned, I would say, this year, a year and a half ago, that don't be afraid to trade stocks that are up a lot, because they can go up more if they're building constructive bases to break out of. You're not buying when the stock's already extended from the base, because that's extremely risky. There's a higher chance that it pulls back, works against you. But if a stock does build a base, just like PENN, then it's a solid trade to take. So here's what I'm looking at. It jumped up from earnings from the previous base by 48%. Huge jump. So I'm interested. But I'm not buying right away. So we have this line of resistance right here. So the highest high was here. Then it pulled back, broke under the 8-day exponential moving average. So at that point, I was looking to trade the stock like in this range here for a breakout. But once it broke under the 8-day, I'm like, all right, let's take these buy orders off. Let's see how this plays out. Low of the day here, found support at the 20-day simple moving average. Popped back up huge with volume. So now I'm back. I'm interested. Did not take the trade yet because I wanted to see how this played out. The next day, the 8-day exponential moving average held with the low here. But this started pulling back on low volume. That's a good sign, because if things pop on high volume and then pull back on low volume, like extremely low volume especially, that means that the only people selling are short-term traders that are looking to book 3%, 4%, 5% profits and take their money and move on. So that's what we saw here. We saw short-term traders take their profits, low volume on the pullback, never closed under the 20-day simple moving average. So there's that support again. And then I bought, let's see, 56.03. So what I did after this second kind of pop-up here, I drew a line from the high down to the low, diagonally here, hitting all the highs of the previous days. And then I put in a buy order pre-market to say if it broke over this diagonal, to buy. And I think, let's see, I think I got it a little bit late. No, I used the high of the previous day as my buy, just to be a little bit on the safe side. But this is what you want. You love to see a pullback that breaks under any of the previous lows here. So this basically matched the lows here, knocking out a lot of stop losses. Pop back up, one more dip to break under the lows here to get, again, those stop losses out. That was the candle that was like, all right, it's go time for me. I put in the order the next day, hit it, went up immediately, pulled back a little bit, that's fine. And then started instantly working out. The best trades are the ones that instantly work out, because then you can always start taking profits. And that's what I did. Every time the stock made a multiple of my average gain, which is about 7-8%. I need to look at my stats again. I think it's around 8%. I started taking a little bit money out. And then let's zoom out here. So I'm all out of this trade at this point, but just took a little bit of profit as it was going over that upper Bollinger Band here. And I got out a day early, but still a really profitable trade. This was a 20% gain for me. On an ideal setup, I was able to use decent position sizing. And that's exactly what you're looking for in a trade. Stuart, yeah, I will. Let's see, how do I do that? So I did post on StockTwits a picture of all the people I trade, all the traders on Twitter that I follow. Also, if you follow me on Twitter, I do a Follow Friday where I mention all those. I didn't get a chance to do that today, but last week, if you look at my feed, it has all the traders there to follow. But yeah, I use Twitter all the time for great stock ideas. Brought a lot of different trades this week. All right, so that was a big winner. Let's talk about some losers. So I had TSM, which seemed like a perfect breakout. And I got stopped out of this trade today for a little bit of a loss, but still going to keep this on my watch list going into next week. So we see huge move up, 63%, whatever. And then just this shelf being formed with the highs here, kind of the lows here. So it's trading in this range. And you can see the lows are getting a little bit higher each time. That's a good sign. So I took the trade at 80.95. So kind of similar setup to PENN. Once this little downtrend got popped up and it pulled back again, then I drew the diagonal through there. Got hit on the high of the day here. Then the next day, boom, started working for me great. I'm like, oh, this is amazing. But just because it started working for me doesn't mean I close my eyes and walk away from the trade. Once it went through a multiple of my average gain, I did take about 10% of the trade off. Yeah, a little bit, 9% of the trade off there at 86. And by doing that, that might have made this, let's see, 80.50, might have made this a profitable trade, maybe a break even. But unfortunately, this trade didn't work out exactly the way I wanted. I saw this high volume day close over the Bollinger Band. I'm thinking, Nick, this is a winner. They're not all going to be winners, and you have to react to that. So once this broke over that average gain, I moved my stop back up. I had it under the lows here, but don't want to give back too much profit on the trade. So pulled back on decently high volume. The next 2 days were on lower volume, pulled back. Today it broke under the 20-day simple moving average, so I did have to take that out for a loss. But still right back in that range. We'll see how this trades next week. But this is an example of a winner that you're sold on. You're like, this is going to be great. And if it starts to work against you, you have to kind of separate your emotions from your strategy, because emotionally, I was already locked in on like, Nick, this is a winner. You're going to tell everyone how great of a winner this was. But once it started working against me, I'm like, Nick, you better not tell people that this was a big loser after it was a big winner. I'd always rather save money than make money. So that's what we did on this trade. Another good example of that is GOGO. This was an ideal setup that seemed to be working out immediately and then started working against me. So kind of a pennant here. This went up 180% in like 9 days. So this is what Mark Minervini calls a power play, where it goes up over 100% in a couple weeks. So this is two and a half weeks going up, and then a really tight high flag while volume disperses. So what that means is tons of movement going up, tons of volume moving up, and then starts trading sideways at the top part of this flag as volume is shrinking. And this was a Twitter call out. I was just scrolling through at the end of the day before it popped out, and they're like, hey, keep an eye on GOGO. And I'm like, absolutely, this is exactly what I look for. So I put an order in if it broke over the high of 10.04. So I put my order in at 10.05. It broke over that, and we got a volume uptick. And this ran, man, from 10.05, it ran 18%. And I did take some profit at 10.61, 11.15. Every time it goes through a multiple of my average gain, take about 10% off. If it does go up and then makes a good base again, I'll add back through another breakout, but want to get profit while it's there, especially while this market's being shaky. All right, yeah, I see work, Facebook and NVDA. I'll try and get to those. Man, so many. Any stocks that I don't get to, I'll either post on Twitter or Stock Twits. If you want to just really quick post where you're from so I can get to the right channel so you can see those if I don't get to those 3 stocks. Thanks. Yeah, so this broke out. I was up 18%. I had my normal position size on it, so I'm thinking, Nick, this is great. The market's going down. My hedge with QQQ is working. I'm printing money here. But I'm still following my strategy to a T, taking profit while it's there, putting that in the bank, and then the next day it started working against me as the market pulled back. I'm like, all right, Nick, this is going to be a winner, so try and stay in this trade. But I moved my stop back to my entry because I'm not going to take a 18% win for a loss ever. So it pulled back to 10.05. Got stopped out from my remaining shares. I think I had 80% of my position left. Got stopped out of there, so it was a small win. Broke well under that and kind of came close to the low of this bracket. So I did try to get back in the trade at like 10.01 when it came back. But then I just cut it. I'm like, Nick, you're chasing here. This isn't what your trading strategy is. We've seen consistent results from a consistent strategy. Let's stick with that strategy. So something I'm definitely watching going into next week, though, because look at this. We have another pennant forming. Big volume on the buy. Stock twits, thanks. Big volume on the buy. Not as big as this because it didn't really take off for multiple days, but volume pulling back with that pennant. So if we get a break over Friday's high, because that 8-day exponential moving average is moving up so quickly, then I might take this trade a little bit less of a position size just because it's my second attempt at it. And I don't want to give back those gains if it does work against me, but something to watch for next week. All right, so that was a couple winners, couple losers. Let's do PEIX. This was a massive, massive winner for me. And it was a low risk trade to put on. So what do I mean by that? A stock that is up 500%, how is that going to be a low risk trade? Because we're waiting for the pattern that sets up where there's moving averages just below and support just below, while we're seeing the volume come down as sellers leave and higher highs, higher lows in that pennant. So that's what we get. 500% move up. Again, this was one that I found on Twitter. It had this pennant. Let's just draw it kind of sloppy here. With the highs, I drew that. But then I'm thinking, okay, if this moves up and is a 500% runner before, we saw volume, increased volume when it moved back over the 20-day simple moving average. So instead of buying when it broke over here at 452, I did do, let's see, I think my buy was 438. Why is that not showing? 428. So what I did with that was I did a little bit of a cheat there and just drew that pennant down, because that by doing this, it's more likely that I get stopped out for a loss. But by doing this, I get to put my stop loss below the 8-day exponential moving average, below the 20-day simple moving average, and below these lows for the same 5 or 6%. Now, if I would have waited to break over this high, then to keep a stop below these lows, that's a 20%. That's way, way too risky. So I decided to put a lower probability of a win trade on to keep that position size and stop loss at a manageable amount. So low risk trade, put it on, got in at 428, immediately started working for me, scaled out a little bit. Let's see, at 464, a little bit more the next day at 464 as it started to pull back. That was a little bit of me being too jumpy. That's something I definitely need to work on, is keeping with a trade when it's still working. Definitely a flaw of mine that I need to improve on. But once it came up here and started battling with that $5 range, and it wasn't going away from there. You saw the high here was 509. high here was 505, high here was 514. So I did buy another like group. So I was at 10% of my portfolio at this point. Sold a little bit when it broke the low of the previous day. Just about a quarter of that of my total position there. But then the next day it gapped up. It was up, I think like 16%, 9%. That doesn't seem right. A little bit. It was, I don't know. It gapped up like 10% over the high of the previous day. We have the 8-day exponential moving average rising. So I'm like, and breaking well over $5. So I'm like, this is it. Here we go. As it kept breaking through multiples of my gain, I took off some shares at 571, some at 614. It held great relative strength the next day, staying in that top half of the candle and on lower volume as it like pulled back, stayed kind of steady. And then today was another winner, up another 16%. I did get out of the trade at a couple places today, 675, 703, and then when it pulled back all the way to 646, this had a long upper wick above the Bollinger Band on increased volume. That's typically a sign of a blow-off top. So I did just take the trade off at that point. This was around a 35% win for me with a little bit more than my average position size. So huge win during a down week in the market. That helped me out greatly. But again, this is a stock that was up 500%, but that allowed us to get a low risk entry. And that's exactly what we're looking for. We're trying to put the risk reward in our favor. All right, let's get to some of your stocks here. Work. All right, yeah, so work definitely dropped down here. Hope you had a stop if you're trading, not investing. That was down 30%. Broke through many meaningful moving averages, even the 200-day simple moving average. So once it's below that, I'm not trading that, but does seem to find some support here. What I'm nervous about is it's under all the moving averages. All the moving averages are now going down, so that's working against you. So not a trade that I'm looking to take right now. But if you're already in it, draw yourself a support line with the low, or the opening price here with the lows here. Scale some out if it starts working against you more, and then you have below the low here to kind of scale out. One trick on the stop losses is wherever there's like support or a low of a previous day, always put your stops a little bit lower than that, just in case algorithms come and try and get you right out at that point. I try to keep mine 0.25%, 0.5% below any of those meaningful support lines, whether that be moving averages or the lows of previous days. All right. Let's do UPS. I had this from StockTwits. So UPS was something that I did try to trade. It was up big, started creating up 33%, started creating this shelf here while volume lightened up. So I took the trade a little bit early. This was a loser for me. Took it 163, got stopped out at 158. So again, I'm keeping all of my losses relatively small. That's the name of the game. If you can keep your losses small, when you win big, you'll pay for everything and more. Had this gap up. I'm not sure if that was on news or not. Pulled down right back to that converging 8-day exponential moving average, 20-day simple moving average. Pulled back, gapped again lower. Is this lower? Right around the lows here. Man, this has been choppy, very choppy. Definitely hard to trade if you have if you're keeping a good stop loss. But something that I'm still watching, because the choppier it is before a breakout, or the choppier it is, while it's still holding good support, while you can see the price relativity, showing good relative strength, that's an uptrend right there. When the market does come back around, usually the more people it had shaken out before the move, the stronger it's going to move. So this is definitely something I'm still watching, but yeah. If you do get in, or if you're already in, you can put your stops under either a bracket stop under like this low and then this low, just to get you out of the trade if it starts working against you. But yeah, been definitely tough to trade. Let's see. I want to get to REKR. So this was another one that I found on Twitter, but I found it a little bit too late. But when I find stocks on Twitter that are already starting to break out, I put them on my watch list because I'm looking for a pullback on low volume that I can sneak back into the trade before it takes off again. And that's exactly what I did on this trade. Again, this is similar to GOGO, where it was up huge, up 72%, high tight flag as volume just, you can see, shrinks completely. Had a couple good low days below previous lows to knock traders out. Closed under the 8-day exponential moving average. So no good buy signals until, let's see. So until basically the day it started breaking out. But by the time I saw it, it was already up here at like 713. 713 to the 8-day exponential moving average at the day was 9%. That's too risky for me. I'll pass it up. But what I did was I watched it, because when it came back down into, let's see what price I got in, 673. 673. So right around here, then it was only 3% to that 8-day exponential moving average, and then to the previous day's low, 6%. So that was perfect, where I could put a bracket stop loss, get in a stock that was breaking out on volume, but pulled back. And the next day we had another huge breakout. You can see I stuck to my strategy. Actually, I added to it immediately the next day because it was showing strength while the entire market was getting trashed. So I was in my normal entry position of about 10%. I had been trading at, again, 5% just because the market's shaky, but got in a full 10% starting position here, and then started scaling out with multiples of my average gain at 741 and 750. Took a little bit off today. I tried to get out at 770, but right when I put in the order to do that, it started pulling back, so just kind of let it sit. But now we're good to go. We got good volume, breaking out, getting closer to that upper Bollinger Band. Great trade because found it on Twitter, didn't chase it, got it for a reasonable price where I could put good stop loss, good risk control in before taking the trade. Outside of that risk control, I also shorted QQQ with the same amount of dollars, so I could hedge that position in case the market kept on pulling back. Thankfully, both sides of the trade paid. So again, this was a week where a lot of smaller stocks were breaking out of constructive bases, out of great setups. So I was able to make about $1,500 on the long side and about $500 by shorting QQQ by putting on risk control. So you can make money with risk control, but I'm not actually trying to make money on my QQQ shorts. Ideally, the market's in an uptrend. Everything's going exactly the way we want. The more breakouts, the better. I could put on actual position size. So yes, this week I made money, but I'm not really trying to make money on my shorts. It's more of just a hedge. So that's REKR. All right, let's get to another one you guys had. That was NVDA. Or let's just do a really quick one. All right, so NVDA had, I think they had good news last week of some acquisition. Kind of grasping at straws here. Again, I don't typically follow news. Usually just technical analysis here. But we got a gap up pulled back down, found some support at that converging 8-day and 20-day, but we pulled back again here. And now once you close underneath those moving averages, they now become resistance points typically. So you can see the high of the day failed out right at that 8-day exponential moving average. Again, today we opened over that, but couldn't hold those prices for long at all. Moved down and closed lower. Volume's a little bit lighter on their second sell-off. We didn't break the lows of the previous low, so that's a good sign. So now if we can start kind of creating a constructive base and hold over the previous lows, now we're looking at this from the long side. Relative strength is another good thing to watch out for. That's holding relatively strong compared to the NASDAQ. So if we can kind of break out of this pennant, I might take the trade, because then we have if it goes over the 20-day simple moving average, then you have that as a stop. You have the 8-day as a stop. A little bit too far down are these lows. So that's something that I would be looking at to trade in to the position. If you're already in it, then the previous lows here are your exit. You want to limit your risk. Sure, it's a great company, but just because it's a great company doesn't mean it can't pull down. You saw Apple's 25% off their lows right now. So the name doesn't always correlate with the price. So another Facebook. Yeah, this was one that once it broke under that 8-day exponential moving average, that has held as tough resistance. You can see high there got stopped out, high there got stopped out. High there broke over a little bit very shortly, immediately pulled back down. High there, and now we broke under the 50-day. The high got failed out there. Yeah, so this was a trade I was in, got out again a couple days early. I kept doing that in the past. That's something that I'm working on. But once it starts breaking under these moving averages, once this starts giving back significant gains, you got to start scaling out of the trade. Make sure you keep protecting profit. That's why when we get these market shakes after 4 or 5 months of stocks only going up, we're conditioned to just keep buying the dip, buy the dip. You always get paid out. But when it starts working against you, if you've always been buying the dip, now you're 100% invested at the top. So when you're getting everything pulled back, it's at 100% of your stocks, of your portfolio value, and that's hurting way, way more. So once trades start working against me, I try and scale out of them as quickly as possible. That's what those bracket stops are for. Yeah, so that's my take on Facebook. There's a gap here in the chart, so likely that we move lower to fill the gap. Once we can get over that 8-day exponential moving average, then I'll maybe add it back to my watch list, but not looking to trade this. Definitely never buy in a downtrend, looking for more of a constructive base before breaking out, like that PEIX that we talked about. All right, let's do, run a little bit short on time. So let's jump to a couple of stocks that are on my watch list. A couple I have already that haven't really broken out. I got in a little bit too early, but hopefully will next week. So first we have Tupperware. So again, this is one where Tupperware you don't think is an industry leader, gonna pay the bills for you, but let's zoom out, get the whole picture. Over a long period of time, it absolutely is not a huge winner. But recently, because we're trading in the short term, we're swing traders, that's what we're looking for. So off the lows, it's up 1,300%. And I missed this trade, but look at how beautiful of a trade this would have been. Exactly what we're looking for with that high tight flag where volume's massive on earnings, pulls back on minuscule volume up to a point. If you just rode the downward diagonal through the highs here, you would have bought on this breakout day, and that would have set you up for a 90% gain. I completely missed it. It was actually someone on StockTwits who showed me this, so again, keep on sending me stocks to look at. I love them. They usually pay me money. So what we're looking for here, because this is already extended a good amount, we're starting to count how many bases the stock has formed. So really, this is the first main base, maybe a little one here. And now we're in a good constructive base, hoping for this 8-day exponential moving average to come up and provide support. I did buy a couple shares early today, got stopped out of half the position. I tried to do a little bit of a cheap buy, but it worked against me immediately. So I put my stop at what was the intraday low and got stopped out of half the position there. But then again, looking for this next week, if this breaks over the highs here, you could see the volume on this shrank immediately once it started pulling back. So add Tupperware to your watch list, a break over the highs, and I'll be buying more. I'll be adding back to my position, and hopefully we get this for another move higher. Because it's now on the third base, probably not looking for a home run. 10 to 30% on the trade would be amazing. I would be like scaling out every 8% or 10% of the trade just to lock in that profit. But Tupperware, not a stock that you might hear about all the time, but is setting up for possibly another breakout. SHLL, this is something that I tried to trade last week. Again, look at this, pulled down a little bit too aggressively for my type of trading, pulled back 40% from the highs here, but it is kind of the same pattern that where pulls back, then starts to break it, pulls back on low volume, and then it absolutely broke out 175%, but broke out, pulled back to that 8-day exponential moving average, broke out, pulled back, found support there, broke out again. Has been shaky here with the market being shaky. I tried to buy, what was it? Let's pull this down a little bit. I drew a diagonal down here and did a little bit risky trade where during the day it was above this 8-day exponential moving average. Because that had held support a couple times in the past, I thought I would get a really low risk entry and then get it pushed higher. Again, this was a lower dollar risk but lower probability of working out trade, and it didn't. It went through my stop loss. I got stopped out for 3% loss on the position, but found support right at that 20-day simple moving average, moved higher. I got in a little bit yesterday on Thursday, bought more with the break over the previous day's high. So basically right at the open, I bought a little bit more because again, the market was acting shaky. This was holding good relative strength. That's in an uptrend. So I did buy more with the break over that. So now I'm in my normal position size for my entry. It held support at that 8-day exponential moving average, made a higher high, higher low, and we're looking for this to move higher. Now this is one where I've called this out, but if the stock moves back down on Monday, but holds that 8-day or holds the low of the previous day, you could set up a lower risk entry using that low, which is about lower than that low and the 8-day. You could put your stop at 3.5% down, or even below like this low. You could use a bracket and get your other stop under 6.5. So your average loss would be 4.5. That might be a good trade to take. So something to watch for next week. Does that pull a little bit lower? Even now it's only 4% extended. So let's see how Monday plays. But this is something that I'm already in. CSIQ. This was one that someone from StockTwits called out. So, and this one is a beautiful, beautiful chart. Really excited about this one when it does work out. So we have drawing from the highs here. Oh, screwed that up. A pennant here and higher highs, higher lows. So that's your pennant. Breakout over that, and it's more confirmed. What I tried to do today was buy along the highs here. So this was something that I put on my watch list later in the day. So I missed the high there. But when it started to pull back, I was like, all right, now if we break over the high, I can kind of sneak by here where it's right at the 8-day and the 20-day simple moving average. Really, really low risk entry. And again, this was one that's up 75% in 2 months. So it has that breakout potential. It has that low risk entry. So I'll be buying this on Monday if it breaks over Friday's high, because I can put those low risk stop losses in, and hopefully we get a breakout here. I'll add more if it does break through that high, and we'll look for a move to all-time high would be 17%. So really solid there. So that's CSIQ. And the last one I have for you guys is HL. Beautiful, beautiful setup here. We got the breakout of 100%, 102%, and now a really good constructive pullback where volume was really heavy during this breakout, but it's getting lighter on each consecutive pullback. Let's see. The lows are getting, recently the lows are getting higher. So that was kind of what I had drawn. That's misdraw. This is what I had drawn. When it broke over there, I did get my 5% of my portfolio in this, and then offset that with QQQ shorts. And it did pull back down, closed right under the 8-day and the 20-day, but what's my stop at? Let's see. Bracket stop at 552 and 564. So 562 is just under the low of the day, and the low of this day right here. So I'll start scaling out if this keeps working against me, but then at 552, that's right where the rising 50-day simple moving average would be. So maybe I bought in a little bit early, trying to catch the breakout right at the source so I could get that low risk entry. But if it bounces and then starts moving up again, I'll just buy again. I'm not afraid to rebuy a stock in a constructive base. The 2 letters, 3 letters, 4 letters that make up the stock ticker shouldn't have any emotional impact on you. You're in this game to make as much money as you can, not to beat Tesla, not to beat HL, not to win your money back from a random stock. That stock has no idea who you are, doesn't know your money, doesn't care about you at all. So being emotionally attached to a single stock is what was probably the number one difference I made once I started getting consistent. Because like everyone, when they start off, you put in way too much position side on your trades. You don't use stops. You pick one stock to really get into. You follow it on stock twits. You're all excited. Every day it moves up. But for consistent results, that's not going to pay. If you're going to be a swing trader, if you're going to be an investor and you know all the fundamentals, that's a different story. I don't know that stuff. I don't pretend to know that stuff. But if you are trying to be a swing trader, don't fall in love with a single stock. Fall in love with your setups. Fall in love with risk control, because eventually those will pay more. So those are the 4 stocks on my watch list. There were a couple other stocks that I wanted to cover, but we're getting towards that hour 15 range. So let's jump back to this. So really quickly, if you guys can do me a huge favor, if you found any value in this, please, please, please just click the like button. Takes you 1 second, and it really helps YouTube to push this video out to other users. Outside of liking, the comments does the same thing. I've been putting in a lot of effort here, and if you've been here since week 1 or even before when I tried to start up the YouTube channel, you could see how much it's grown in the past couple weeks. I feel like we're getting really valuable information out there while a lot of new traders are coming into the market, which is great. Take your lumps early while you still have just a little bit of money. So when you do start making good money, you can start putting that to work even better with good systems that are going to pay a lot more. So I think it's great that there are newbies in the market. I think it's going to be way better for their long-term financial health that they are taking these smaller risks now, but hopefully learning from them to be consistent in the future. Like I said in the beginning, I will be starting a stock trading 101 class. So comment any videos that you'd like to see below, anything that you're unsure about that I might be able to shed some light on. So we'll be covering all those technical setups, position sizing, stock splits, all those good stuff. But I want to hear from you guys. Comment those below. And if you haven't already, please subscribe to the channel. I do this live stream every Friday at 7 p.m. Central Time. We go over those trades, winners, losers, watch list, anything that you guys bring me. And with that said, we still are in a shaky market. It's not time to hit any home runs. We're trying to make minimal gains, trying to find the stocks that are holding good relative strength while the market is pulling down. Because when the market does pull back up or bounce back up, those stocks are going to bounce even heavier. So mark down the stocks that are holding good relative strength for you. Trade with a little bit lighter position sizing than you would. And I love just shorting QQQ with the offsetting position. So I do have some risk control on that side. If everything comes back up and I start losing money on my QQQ short, that's great, because that means the market's coming back, buyers are coming back. All the setups that I have that are on good relative strength are going to take off, and I'll make even more money. So that is the stream. Thank you for stopping by. Again, please like, comment, subscribe. I'll see you next week.